Gold sticks to intraday losses in Thursday's European session, albeit it continues to show some resilience below the $4,700 mark. The US dollar gains positive traction for the third straight day as signs of friction between the US and Iran remain due to the American naval blockade of Iranian ports. XAU-USD Technical Overview. The XAU-USD pair currently sits near the lower boundary of an upward-sloping parallel channel, showing a broadly neutral near-term tone. The Relative Strength Index, RSI, hovers near 39, leaning toward the lower end of its range and hinting at fading bullish momentum, but not yet in oversold conditions. The Moving Average Convergence Divergence, MACD, indicator remains in negative territory, reinforcing that upside attempts may struggle until momentum improves. Meanwhile, a convincing break below the trend channel support around $4,691 would expose the prior structural base near $4,568 and pave the way for deeper losses if selling accelerates. On the top side, bulls would need a sustained break above the channel resistance at roughly $4,926 to revive the broader uptrend and open the way for additional gains. Fundamental Overview. A standoff over the Strait of Hormuz and dimming hopes for more rate cuts by the U.S. Federal Reserve, Fed, act as a tailwind for the greenback, exerting some pressure on the non-yielding yellow metal. U.S. President Donald Trump announced a temporary extension of the Iran ceasefire on Tuesday, just hours before it was set to expire. Investors, however, remain skeptical about a durable de-escalation amid the lack of progress in peace talks and rising tensions over the Strait of Hormuz. Trump had said that the U.S. Navy blockade of Iranian ports will continue, while Iran has set the removal of the U.S. naval blockade as a strict precondition for resuming negotiations. Furthermore, the Islamic Revolutionary Guard Corps, IRGC, said that it had captured 2 container ships on Wednesday, its first seizure since its war with the U.S. and Israel began in February. This raises the risk of a further escalation of tensions and keeps geopolitical risks in play, underpinning the USD's reserve currency status. Meanwhile, continued disruptions to energy supplies through the strategic waterway remain supportive of elevated crude oil prices, which has led to a significant surge in global inflation. This, in turn, fuels speculation about a more hawkish stance from major central banks, including the Federal. Although Fed officials projected one rate cut by the end of this year, sticky inflation and resilient economic activity have increased the threshold for a reduction in borrowing costs. This might force the Fed to adopt a wait-and-see approach, which turns out to be another factor supporting the USD and contributes to driving flows away from the non-interest-bearing gold. The XAU-USD bears now await acceptance below the $4,700 mark before placing fresh bets and positioning for a further depreciation.